What if I told you that Wall Street traders are being replaced, not by younger analysts, but by algorithms? That some hedge funds now make billions in profit without a single human calling the shots? And that artificial intelligence, once just a buzzword, is now predicting market movements faster and more accurately than any human ever could? This isn't science fiction. This is the new reality of finance, where AI is rewriting the rules of investing, trading, and even risk management. Welcome to the future of Wall Street, a world where machines don't just assist humans, they outperform them. For decades, Wall Street has been powered by sharp minds, complex models, and lightning-fast decisions. But in recent years, a new player has entered the arena, and it doesn't eat, sleep, or panic when the markets crash. We're talking about artificial intelligence, a technology that's transforming how money moves across the globe. From algorithmic trading and portfolio management to fraud detection and credit analysis, AI is quietly reshaping the foundations of the global financial system. In this video, we'll explore how AI is replacing traditional traders and analysts, the biggest firms on Wall Street using AI to gain an edge, how machine learning models predict stock prices and manage billions, and finally, what this all means for the future of finance and your money. So let's break down how AI is taking over Wall Street and what this revolution means for everyone, from small investors to the biggest banks on earth. The rise of the machines on Wall Street. Wall Street used to be defined by human intuition, traders shouting on the floor, analysts studying company reports, and hedge fund managers making gut calls on the next big stock. But now, the shouting has been replaced by servers humming in data centers. Instead of traders yelling, algorithms are quietly executing millions of trades per second, driven by machine learning models that can analyze decades of market data in seconds. It started with quantitative trading, pioneered by firms like Renaissance Technologies, Two Sigma, and Citadel. These firms were among the first to realize that numbers could beat emotions. Renaissance's Medallion Fund, for example, is one of the most successful hedge funds in history, earning over 60% annual returns before fees, all driven by complex algorithms and data models, many of which are now enhanced by AI. But here's the kicker. AI doesn't just look at numbers anymore. It looks at news headlines, tweets, satellite imagery, and even consumer behavior to predict how the market might move next. That means an AI system could notice fewer cars in a Walmart parking lot from satellite photos and instantly predict lower quarterly earnings before anyone else even reads the report. Algorithmic trading, the heartbeat of AI finance. Today, more than 70% of all stock trades in the US are executed automatically by algorithms, most powered by AI. These AI models analyze patterns humans can't see, tiny fluctuations, correlations, and data points that indicate market sentiment and volatility. AI-driven trading bots like Kensho, Numerai, and Upstocks I use machine learning to detect patterns in massive data sets, everything from oil prices and currency shifts to social media trends. For example, Kensho Technologies, now owned by S&P Global, processes billions of data points to understand how specific events, like interest rate changes or political elections, affect financial markets. In simple terms, AI is no longer just watching the markets. It's reading, learning, and reacting faster than any human ever could. It's turning market chaos into opportunity in milliseconds. Predicting market movements with machine learning. AI's most powerful advantage is its ability to learn and improve without explicit programming. Machine learning models analyze historical data, recognize patterns, and adjust their strategies in real time. For example, if an algorithm notices that tech stocks tend to drop before the Federal Reserve announces interest rate hikes, it can automatically rebalance a portfolio to minimize risk. Some firms even use natural language processing, AI that understands human language, to analyze financial news, earnings calls, and tweets. So when Elon Musk tweets something about Tesla or crypto, these algorithms instantly detect sentiment, predict market reactions, and adjust trades accordingly, often before you can even finish reading the tweet. That's the level of speed and sophistication AI brings to finance. AI in risk management and fraud detection. AI isn't just changing how people invest, it's transforming how banks manage risk. Traditional risk management relied on manual assessments and simple statistical models, but AI systems can now simulate millions of market scenarios, predict potential losses, and recommend optimal strategies to minimize them. For instance, JP Morgan's Coin, Contract Intelligence, uses AI to review thousands of financial documents in seconds, reducing 360,000 hours of manual work to just a few seconds. Similarly, AI tools are helping detect fraud and suspicious activity across global transactions. Machine learning algorithms can analyze patterns in real-time transactions to flag anomalies, helping prevent billions in potential losses from financial crime. This means fewer human errors, faster response times, and far more accurate predictions of potential crises before they happen. Robo-advisors and democratized investing. AI isn't just helping billion-dollar hedge funds, it's helping everyday investors too. Platforms like Wealthfront, Betterment, and SoFi use AI to manage portfolios automatically. These robo-advisors analyze your financial goals, risk tolerance, and market data to create personalized investment plans without expensive human advisors. For example, if the market becomes volatile, the AI automatically rebalances your portfolio. If you're nearing retirement, it adjusts your asset allocation to reduce risk. It's personalized finance at scale, powered entirely by algorithms. This is how AI is making investing more accessible, affordable, and efficient than ever before. AI in high-frequency trading (HFT). High-frequency trading is where AI truly shines. These systems use advanced algorithms to buy and sell stocks in microseconds, long before a human can react. To put that into perspective, a human blink takes about 300 milliseconds. AI-powered HFT systems can execute thousands of trades in less than 1 millisecond. That's how firms like Citadel Securities and Jump Trading make millions every day, by capturing micro profits on enormous trade volumes, made possible only through AI and machine learning. This ultra-fast trading has become so dominant that even slight network delays, like a few milliseconds, can mean millions in lost profit. It's a digital arms race where the fastest AI wins. How AI is changing the workforce on Wall Street. Here's a sobering truth. AI isn't just transforming finance, it's replacing people. In the 1990s, big investment banks had thousands of human traders. Today, a large part of their trading floor has been replaced by data scientists, coders, and AI engineers. Goldman Sachs, for instance, once employed 600 traders on its New York equities desk. Now, that number has dropped to just 2, supported by 200 engineers maintaining the algorithms. That's the future. Fewer humans making emotional decisions, and more machines making precise, data-driven moves. But it's not all bad news. This shift is also creating new jobs. AI modelers, machine learning specialists, and data analysts who design and oversee these intelligent systems. Wall Street is evolving from human intuition to human supervision of intelligent machines. The dark side: risks and ethical challenges. Of course, with great power comes great responsibility. AI systems can make mistakes, sometimes catastrophic ones. For instance, the 2010 flash crash saw the US stock market lose nearly $1 trillion in value in just minutes, largely triggered by algorithmic trading errors. Although safeguards have improved since then, the risk of AI-driven volatility still exists. There are also ethical concerns like AI making financial decisions that favor profit over fairness, or bias in data leading to unequal access to credit and investment opportunities. If AI starts controlling too much of the market, who's really in charge when something goes wrong? The firm, the programmer, or the algorithm? Regulators are now scrambling to keep up with the rapid pace of innovation, trying to ensure AI remains a tool for good, not chaos. The future of Wall Street isn't about men in suits yelling over phone calls. It's about machines silently moving billions of dollars with precision, logic, and lightning speed. AI is transforming finance from a human-driven game of intuition into a data-driven science, one where algorithms learn, adapt, and outperform even the best traders. For entrepreneurs, investors, and everyday people, this revolution brings both massive opportunity and serious responsibility. AI is leveling the playing field, making markets smarter, faster, and more efficient. But it's also challenging us to redefine what it means to trust, predict, and profit in a digital economy. So, as AI takes over Wall Street, one question remains. Will we control the machines, or will they control the markets? Because one thing is certain, the future of finance has already begun, and it's powered by AI.